It's better than the street was anticipating, and strong electric vehicle sales, as Manis said. I wonder, Herbert, how much stronger this is going to get. When do you see, or what does the trajectory of growth look like from your seat right now?
We would be very happy if we could finish the year basically on levels of 2019. That would be our target. There's still a lot of challenge ahead of us because of semiconductor shortages. I think we could manage very well in the first quarter the general shortage, but the incidents in Japan and in America, they're going to hurt us now in quarter two. But over the year, we think towards the year end, we are hopeful to recover.
Can you quantify how much they're going to hurt in the second quarter? We've heard so far some pretty shocking numbers in the industry. Ford, for example, a close partner of yours, said 50% of its production will be cut in Q2 because of the chip shortage. It's going to cost them $2.5 billion. What do the numbers, specific numbers, look like for Volkswagen?
Actually, I wouldn't give you numbers now because we are fighting day by day. We're going to be hurt, but not in that kind of magnitude. So we think we will see some lines stopping for a few days, for a few weeks, but not as brutal as the figures we see from some of our competitors.
How about how long it lasts? You know, some have told us a few months, and some have said this semiconductor shortage, this bottleneck, is going to take a few years to play out. How long does it look like, from your vantage point, we're going to see problems here? Shortage probably we will see through this year at least, next year probably, because the ramp up and the addition of new capacities will take time. But what we hopefully not going to see is such kind of incidents which we can see all over the world next quarter because of the incidents we had in America and in Japan. So semiconductors are going to be tight supply, but I think there's a lot of now additional capacity added. We are in direct discussions and dialogue with the semiconductor manufacturers, with the foundries, and we think that it's a transition. The semiconductor demand has raised a lot because of the Internet of Things, and now it's important to add capacity as fast as possible. I wonder about the ways in which you get the most out of your production. Other car makers have cut out certain functions, capabilities from their vehicles, taken out some screens from their vehicles. You've got, obviously, incredibly high-tech vehicles. The tagline for Audi is Vorsprung durch Technik. Is it possible to produce more cars if you cut back on some of those additional capabilities the cars have?
That's also one of the measures that you, let's say, optimize your mix and let's say at least through the year, then it should be possible also to recover the higher equipped vehicles. But that's also something we are doing, but not in a general mode. That's referring to some product lines, but we're doing everything to keep production running and make the best out of it, and on the market side, satisfy as many customers as possible at the right time.
Do you aim your production at higher margin vehicles? Daimler CEO Ola Källenius was saying that, for example, they do everything they can to get the S-Class out there because, of course, they make the most money off of that.
Yeah, I think that's a natural behavior. No, you would always optimize your sales results if you are on shortages. So I fully understand what Daimler is doing there.
You are investing so much in technology, Herbert. I mean, those have been the biggest headlines in terms of the way you're steering your company right now. Software is obviously a massive investment that our Christoph Rauwald has been doing a great job reporting on. What about the chip side of things? Will you make your own chips the way Tesla, the way Apple has designed its own chips? I think there are some areas where we share chips with other industries, and that will remain the same. But we will see more specific ASICs for automotive as we're coming closer to autonomous driving. I think that's a necessity. Also, today's chips we are purchasing are specific for automotive, many of those, and that will increase definitely through the next years.
Is IT becoming so key to the production of your cars that you need to add a new board member specifically responsible for the technology that's going into making these vehicles?
The biggest step was really founding a software subsidiary, Cadillac, and we are ramping up our capacities. We are filling in the job cards. We're making good progress. We have close to, towards the end of the year, we will have close to 5,000 people working there, 15 companies which we are integrating, and then step by step we will ramp up our capacity. So we think we are well on track.
But you're not searching for a new management board member to strictly focus on the IT?
I would say that that's also an open job card, and you know that. But the most important open job cards we have in Carriot, so in our software subsidy, where we are really focusing on. The board member would focus more on the company software side. That's something which is not the highest priority.
I'm looking at pictures of the i4. Have to say it's gorgeous. I have friends who already have taken delivery and love them. You've also got the Q4 from Audi coming out. You've got the Taycan Cross Turismo, the wagon version of the Taycan. Will you narrow your EV sales gap to Tesla this year? Will you even close it possibly by, say, 2022?
We are working on it now. As you said, we have good product momentum. The take-up of the EVs is good. We have good order bank, about 100,000 orders, open orders, which we are delivered. The EVs are less impacted by the shortages of semiconductors. So yes, and we had an increase of 80% EV sales, more than 170% more plug-ins sold. So we're still optimistic that we can reach our very ambitious target of selling 1 million EVs in 2021.
We've seen other costs, by the way, Herbert, absolutely soar in terms of commodities, inputs, so key for these vehicles, including EVs. Is that a concern for you going forward this year? Are you watching commodity prices very closely?
Yeah, for sure. Commodity prices play a role. Steel, also precious metals are really on all-time highs. So this is a concern for us. We try to manage through long-term contracting, finding new sources, but that's going to be a challenge through 2021 for sure. As demand is rising now, everyone and supply is constrained. So I think that's a natural development we have to manage.
Well, is there a silver lining in that, you know, with demand so strong and the consumer willing to pay the price? I mean, I've seen some incredible dealer markups across all brands. Do you have renewed pricing power this year?
You know, we try to cope with the situation, try to sell the better mix because of the constraints, and we had very good margins in the first quarter. Now, this is we are very pleased with the mix of sales we got and also the margins we achieved. 7.7% margin first quarter. We are very happy. Also, high cash flows we generate for the let's say transition story. Generally, now, if in countries where we have also currency differences now, like Latin America, yes, we have to price, and so far that's going well. So the customer accepts the higher prices.